Do you know how much your business is worth? We're going to talk about it on today's episode. Listen, there's a lot to learn when growing and scaling your business.
That's why we created the Business Choreography podcast, where we talk about choreographing your marketing, operations, and sales into dynamic systems that increase your revenue and your impact.
We'll explore solid business principles and discuss all things that make businesses dance to success with clarity.
We'll help you figure out where the holes are in your business and what you can do to fix them. Think of us as your official business choreographers, aka your insider growth strategists.
Remember, your choreography matters. Welcome to the Business Choreography Podcast. What's up, everybody? Michael Johnson here with the Business Choreography Podcast, and I'm excited that you're here today. Why? Because we're going to talk about how much your business is worth. This can be challenging. Now, I know you might be tempted to go out and get a broker. Don't do it. Don't do it. I love the people. They're nice people, but don't get a broker. You don't need one. All right, here's why. Because much of this you can do on your own. You're paying extra for something you don't necessarily need. Now, I know I'm probably going to offend a whole bunch of brokers out there, but I'll tell you what, just get clear on what your business is worth. Now, you might be saying, Michael, I don't know how to do that. I know how to run my business. I know how to do my thing, but how do I valuate my business? And so maybe you've Googled it, maybe you've looked it up, maybe you're typing it in, trying to figure out all the things. I'm going to give you some of the keys to evaluating your business. Now, guys, I do this all the time. I talk to so many businesses and I have to go through and evaluate their business. I have to look at it and go, okay, is this something I want to purchase? Is this something I want to bring into my portfolio? My assets? Is it something that's going to fit within what we're investing in? And I have to figure out how much that business is worth. Now, I know it's potentially your baby. Maybe you started this, maybe you bootstrapped it from the beginning on, and you have an emotional connection to it. And for that, well, all I can say is I'm sorry. We're going to have to strip down some of that, and we're going to have to take some of the emotion out of it. And we have to actually look at what the numbers say. I understand that you believe that your business is worth millions and it's going to change the world, and I don't doubt that. However, the numbers are the numbers. And I tell this to people all the time. The numbers are the numbers. So we're going to go through a list of things here. Take some notes. You can pause it, rewind it, go back again. And if one of your business owner friends needs to hear this, then go back and do this. This is so valuable, whether you are ready to sell or whether you're thinking, gosh, maybe I'd like to sell this business in 2 or 3 years. This is super important. Start doing it now. If you're at the place where you're ready to sell right now, then we have to kind of accelerate this a little bit. But this is going to help. This is going to make a big difference along the way. So I have a list of things that we're going to talk about today. We'll go through them one by one and take some notes. If you're driving, be careful, be safe. Don't get in an accident. Make sure you listen to this at a time when you can write down some notes. All right. So let's start. Number one, this may seem obvious. It should seem obvious, although it's not. And you'd be surprised how many times I've talked to a business and this isn't the case. But number one, understand your P&Ls. Michael, what's a P&L? What? I know. Sometimes we're in business and we bootstrap and we just go and we do the thing, right? A P&L is your profit and loss statement. You have to understand where your profit's coming from. You have to know what it's doing. In fact, if you can break it out and say, I have 20% of my profit coming from my sales team. I have 40% of my profit coming from the funnel that I built. I have another 20% coming in from affiliate sales. Great. You have to understand where your profit's coming from. Right? Maybe it's a particular product. Maybe it's a particular service or a course that you sell. It doesn't matter where it's coming from. Understand it. It should be represented in your profit statement, right? In your profit and loss statement, you want to know, don't just have it as a basic number. You should know the inside and out, understand where your profit's coming from, understand what your profit is. Now, there are two portions of your profit. There are your gross, or there is your gross profit. That means before all of your expenses, before you start paying out, before you have to take care of everything that is part of that profit coming in, right? That's your gross expenses. I always like to think of it kind of like it's gross. That's gross. It's disgusting, right? Why? Because we still have to pay out. We have to pay out our expenses. Anything that lends itself to making sure that product is deliverable, whether it's a service or whether it's shipped or whether it's something that's being manufactured and has to be made and you have to put it together, right? That's your cost of goods sold. That's all of that stuff. I know this isn't, some of this is like, Michael, I don't want to be an accountant. That's why I started a business. I understand. Okay, but just hang with me for a second. This is super important. Your expenses are your expenses. Oh my goodness. The number of times I've talked to a company and they've left out expenses, it kills me. It's amazing. They come to me thinking that they're making a certain amount in profit and they didn't include all of their expenses. Oh my goodness. If you're a business owner, you must include all your expenses. Guys, why would you not do this? I know you're thinking because it makes my profits look higher. No, it doesn't. Actually, it hurts you because it's going to hurt you in your taxes. Now, I'm not a tax professional, so make sure you seek out a tax professional to make sure that you understand legally what you can write off, right? But your expenses for the business, if they are legitimate expenses, in many instances and in most cases, the law says that you can write those things off on your taxes to lower your tax liability. Now, go seek out a tax professional. They are amazing. They spend their life looking at the tax law and making sure that they can help you get legitimate tax breaks for running a business, for doing something that is going to serve the human race. And that is great, right? So you want to make sure you include all your expenses. This is important not only in valuating your business, but just for you and your taxes, making sure you're taking home as much as you can take home and keeping as much as you can keep. Because taxes are a necessary part of what we do running businesses, but you should still have a plan or a strategy to keep as much as you can keep. And that's what those great tax professionals are for. So you should use them and find somebody that you trust and that you can work with and that can give you great advice in that area. But you still need to know and understand what your expenses are. So your P&Ls, right? Your profit and your loss, that's going to help you figure out your books. Your books have to be in order. I am just blown away by the number of businesses that I talk to that their books are just not in order. And in most instances, somebody looking to purchase your company, if you want to sell or you're preparing to sell, if your books are not in order, that's one of my mentors says, I'm allergic to books that are not in order. He says, if I see books that look even somewhat fuzzy, I'm out, right? No ifs, ands, or buts, I'm out. And I've kind of taken on that same approach. If your books are fuzzy, man, there better be some really good things happening to overcome the fact that your books are fuzzy. So you have to have your books in order. That means having a good bookkeeper and a good accountant. Not just the bookkeeper. The bookkeeper isn't necessarily the same as your accountant. They have similar skills, but your accountant, your tax professional can actually help you strategize with what's going on. So it's important that you seek somebody out that you can trust and that you get on your team. In addition, you need to have a balance sheet. For goodness sakes, business owners, you need a balance sheet. You need to know what your assets are and you need to know what your liabilities are. This is as simple as, do I have machinery? Do I have real estate? Those could potentially be assets depending on how you own them. And you have liabilities. Also, machinery, real estate, those could also be liabilities depending on what you have invested in them. If you own the real estate outright, maybe it's an asset. If you are paying for the real estate, maybe it's a liability. If you have debt, it's a liability. Okay, so you have to understand your balance sheet. And this is important. And you need to have this together. If you're going to sell and evaluate your business, you need to have that together because that's going to make a difference in the overall valuation of your company. Okay, so you've got to know those assets. You've got to know your liabilities. That's great. Next up on the list, we've got to understand your bottom line. I would call your bottom line your net profits, right? And this is before earnings, interest, depreciation, taxes, amortization, right? EBITDA. If you haven't heard that term, EBITDA, you need to learn it. It's there, and it's something that's important, right? But this net profit is before that. Okay, so we want to know what your net profit is. What are you bringing in? What is the net bottom line? Okay, great. That's perfect. That's going to be a huge portion of figuring out what your business is valuated on. You need to know your net profit. Some people call it cash flow, although cash flow doesn't necessarily mean that everything's included in what it is that you're doing. So you do definitely need to know your net profit. We're going to dig into that just a little bit more. In addition to knowing your net profit, once you've figured out your net profit, and that's going to come from understanding and knowing your books well, you still need to go in and do, some people call it a recast. In fact, in your maybe in your QuickBooks software, you can do a recast. And what is a recast? A recast is this. If you were going to sell your business, what I want to know as a purchaser is I want to know, hey, are you taking any excess owner benefits? Are you paying yourself in some other ways that maybe you didn't include in the or that were included in the expenses because they're legitimate write-offs? Don't do it if it's illegal, okay? But if they're legitimate write-offs for your tax bill, then we want to actually, that favors you. You want to take those things out. Are you including your personal cell phone in the business expenses? Well, you want to take that out. What's the cost of that? Take that out, add it back to the profits. I know, right? We're gonna get you some more money in your profits. Now, once you do that, okay, you can actually raise the net profits because you're taking out some of your excess owner benefits, right? We'll put that in quotes, owner benefits, right? So you have owner benefits, and you need to make sure that you add those back into the profit. Because if you are not going to be in the business, which if you were going to sell it, the theory would be that you would not be in the business anymore. And so if you're not in the business, well, hey, you maybe wrote off something for a vehicle that you were legitimately writing off for a business expense. But when you're no longer in the business, that vehicle is no longer part of it. Now that has to get added back because you were taking it out as an expense. That lowered your profit. You want to raise the profit, right? As much profit is actually legitimately there, that's good. This is something that is important that you do, and you do well, because your net profit is going to be the thing that when it's all said and done, combined with looking at your balance sheet, understanding your assets and your liabilities, that's going to be what the company is valuated off of. Now, there are different valuations that can be done for different types of company, and this can get a little bit complicated. However, generally speaking, people want to know your net profits. If I'm buying a business, I want to know what your net profits are. That's a great place to start. If you lie on this, and when I say lie, that's kind of a harsh way to say it. But if you're not accurate and they go in, if I go in and look at your books, right, and look at your actual accounting and see how you've done it, if it's wrong, oh boy, that is a really bad way to start off selling your business. So you don't want to do that. You want to make sure that is accurate. You want to make sure that your net profits is clear as day. And you want to make sure that you add back any of your salary that you were taking out. You want to add back anything that you were taking and putting into the business as a legitimate business expense. Cool. Again, seek out your good tax professional. They can help you with that. Make sure they're business tax professionals, right? Because if they're not, they might not know the laws in terms of how businesses can take advantage of the great tax law out there that can be of an advantage for you as a business owner. Right? So make sure you have a business tax professional, not just a regular old income tax for a typical employee. You don't want that. You want somebody that understands business. Okay. Now, once you have that, now you can start to evaluate the business. Now, if you are the owner and you are operating this business, there's kind of a cap on what you can do, because if I'm buying the business, I'm going to look at that and go, well, How much do I have to replace? I have to replace you and all of your skills and your expertise. So the business is going to be valued slightly less because you are an integral part. If you can't leave for 2-3 months at a time and the business keeps doing exactly what it's doing, then you are an owner operator. And so that's, you can check that off the list. You can say, ask yourself, can I leave for 2 or 3 months and everything's going to keep going or get better? Then if I can't, then I'm still an owner operator. And that's just a fact. Okay. So I don't mean to be offensive in any way, shape, or form, but if that's the case, you are an owner operator. Now, if you want to start to take yourself out of that, well, then that can start to increase the value of your company. But generally speaking, unless you're completely out of it, then it doesn't really matter. You're still an integral piece, and that would have to be replaced. So if I came and I were to purchase your company and you were an owner operator, there's a cap as to how much you're going to get in terms of a valuation for your company. If you're completely out of it and removed, well, now there's a different valuation that you're going to get, right? So you got to think about that. And maybe you don't have the skills to remove yourself. I know that sounds funny, right? But if you are looking at your business and you're thinking, well, I would like to get a higher valuation and sell it for more than if I was an owner operator, but I don't know how to remove myself from this business. Great. That's when you need to seek out someone like me and go, hey, how can I do that? I need some help. I need some indication as to how to do that. And then you can start to get on a path and on a journey to get yourself out of the business. Right. And if you can do that, then it raises the valuation. However, you may want to sell it before that. And that's okay, because there's a great valuation, I'm sure, that you can get out of your business, even as an owner operator. In fact, it happens all the time. And I love purchasing companies like that. So understand that this is a huge, huge way to value your company. Now, in terms of what kind of multiple? Oh boy, maybe you've heard of multiple. You've got to determine a reasonable multiple. If you're an owner operator, your multiple is probably going to be somewhere based off of averages. Now, if you're watching this later, it's 2022 right now. Generally speaking, most businesses under $1 million are probably going to be in a 4 times multiple or less. Probably less, okay? Because you'd have to be earning up there. And when I say million, I'm talking about profit. Now, this isn't the only thing. There's a lot of other factors that you got to look into your business, because there's obviously assets in there that you need to look at. But generally speaking, it's based off of the valuation of your net profits, right? So if you're at $1 million, maybe you're up in that 4 multiple of a 4, but it's probably going to be less. And average, you're looking anywhere from a 1 times multiple of profits all the way to 4. But if you're owner operator, it's going to be really, really hard to get above 4. And that's, again, it's 2022, end of 2022. And, the new averages and the new statistics and data will come in 2023, but I doubt it's going to change that much. Right now, if it's 10 years from now and you're watching this, maybe it's changed a ton. But, you can look at that and you can check out other companies that have sold for an average of how much more, how many times, right? The multiple is how many times your profit it could be worth. So if you're making, let's say you're bringing in $500,000 in profit, and you're getting a 3 times multiple, which would be a pretty decent multiple. I mean, I think that's really fair. That would put you at 1.5 million. Right, in terms of an asking price. Now, that's according to what's going on in your business. I mean, there's a lot of other factors. The books have to match up. All the stuff that we talked about today has to be there. But I'll tell you what, getting this stuff in order and planning to get this stuff in order as you move forward in your business, if you're not ready to sell right now, but you want to sell in a few years or maybe in a year, you got to get this stuff in order, because it's going to make your life so much easier. This is super important. Guys, I hope this has helped you at least get into the right mindset of valuating your business and understanding where you're at. If you need some more particular help, I'd love to chat with you. I love investing in businesses, purchasing businesses when I can, and just helping businesses grow and scale, because this is your thing. You want to grow it. You want to make it big. You want to impact. You want to influence the world in the thing that you do. And I understand that, and I'd love to help out. So if you need some help, please reach out and let us know. We're happy to lend a hand here and see what we can do to help you out, help you move forward in your journey to get yourself prepared to sell your business. Now, just as a side note, you don't have to sell it just because you prepared it to sell, but it sure is cool if you've prepared it to sell and you look at it and you go, wow, these are the conditions that I'd like to stay in, right? Cool. Then stay in it. Don't sell it. That's great. And sometimes you just need some help getting to that point. So let us know. Love to help you in that regard. Other than that, I hope this has been helpful. If you know somebody that needs this, if you know another business owner that you're like, gosh, you know what? They need to hear this. This is going to help them, or, they're selling. Let them hear this because they need to know this information. Anyway, thanks for joining me today on the Business Choreography Podcast. And as usual, we will see you on the next episode. Take care.
The choreography your business is running can determine whether you can grow and scale to the next level.
It's so easy just to take business day by day, but that can leave you putting out fires and keep you from growing.
Find out how the choreography for your marketing, operations, and sales can raise your revenue and create more impact.
Schedule a growth strategy analysis call with us today.
Go to bizchoreo.com to book your time.